All right. Good morning. I'm Nagesh Pabbisetty, for those of you who may not know me. Um, Thank you for joining the webinar this morning. Um, I am the co-founder and CEO of RealtySlices.com. And RealtySlices is a two-sided marketplace for fractional real estate investing, bringing sponsors and investors together on a blockchain platform. This is, I'll be coordinating today's meeting, and this is the fourth project being floated on RealtySlices.com, and it's the third project by sponsor Rice Capital, represented in this meeting by Pavan Narkulla, who you also see in this meeting. The front part of the presentation is going to be a deck that is presented, and information will be shared, including um, the due comments on risks and how you need to evaluate and think about projects like this, which are real estate investments, and they're high risk projects, and there is a possibility that you might lose your capital. And it is very important for people to understand the kind of investment that you're making. And followed by the main part of the presentation, there'll be a section where there'll be a free-flowing Q&A. Until then, the chat would not be open. Once we are done with the main part of the presentation, the chat will be open. Okay, over to you, Pavan.
Hey, thank you, Nagesh. Thank you everybody for joining. I know it's Sunday and right around the holidays time, and thank you for taking time out of the family to come join and participate. Okay. As Nagesh has mentioned, this is our fourth project, and for those of you who have been with us in the past, we executed three deals, which includes the one in Austin, which is Taylor near Samsung, and there's one retail in Fairfax and Orlando. Okay. And overall, across the three deals, especially with respect to Austin Taylor, we are doing pretty good. The county valuation from the time we acquired to the present value of the county has increased by 2x. And there has been substantial permits that are issued around Samsung Taylor, and the construction projects are going on. Okay. Besides that, we have also went ahead and rezoned the property in Taylor. And right now, we evaluated what is the best use of the property. We engaged a third party architect and civil firm, and we are going with building a indoor and an outdoor mix of sports facility. So we are working on building plans and working with city to realize the vision of the land that we acquired. And again, with respect to Orlando and with respect to Fairfax, both of them are our retail investments, and we have promised around 7.2% of cash flow, and we have exceeded beyond that in the last, I think, around 16 months of the investment period. Besides that, we have also returned the capital gains, to the investors, on those two assets, right? With that said, I will go ahead and start the um, current project, which is in the state of Washington. Let me share my screen. Let me know if you all can see the screen. Um, Nagesh, you can keep an eye on the chat and any questions that are coming up. Yeah. Okay. Um, So let me minimize this one. Good. Right. Okay. So this is the project. It's a mixed-use development project in the state of Washington. And this project, like others too, we are floating it for the accredited investors under the Regulation 506C. With a potential gross area of 9,000 square feet commercial and 20,000 square feet of residential in the town of Duvall, Washington. And I'm going to talk about the city by itself. And what you're seeing here on the screen, there is a good amount of retail as well as the residential development from national builders. And the orange boundaries that you see is the subject parcel. And the one with the white box is the structure that we plan to build as a mixed use, which includes ground retail and the above floors primarily for the residential use. Okay. Right. Again, as a disclaimer, we are presenting this offering through Rise Capital LLC. Rise Capital LLC is the a property developer to the what we call it as the sponsor of the project, which primarily brings in vetted properties fully analyzed to the marketplace of RealtySlices. Okay. And again, as part of the disclaimer here, we are not financial and real estate investors or advisors. Okay. And you should consult your own attorney, business advisor, or tax advisor for any investment purposes. Okay. And this presentation primarily contains a lot of information that is being presented from analysis. Okay. And this most of the information that you see in here may change subject to the nature of the market and subject to the state of development that we will be in. Okay, we're going to share the presentation out after the webinar, and it's also available on realtyslices.com to download and also go through the same. Okay. Um, as part of the agenda, we'll go through executive summary, development overview, what is the vision for the project, okay, and how we basically plan to bring the best and the most return of investment on the project. The market, what is the current state of the market? Little bit more about Duvall for those of you who are not locally in the Washington state. We'll talk about the market and how it supports us for the vision that we have. The financials with respect to what you plan to develop, what are some of the cost projections and the returns we have, the timeline, the team, and the next steps. Okay. Overall, we'll try to wrap it up in about close to around 45 minutes and open the door for any questions, across the board. Right. Yeah. On the executive summary, Rise Capital is the sponsor, and Rise Capital in the past has done the deals of Orlando and Fairfax, and this is the repeat investment on the RealtySlices platform. Okay. And we are raising 2 million of investor equity to develop the mixed use project of approximately 29,000 square feet, combining residential and retail. Okay. Uh, the investment is around 50,000, and the hold period on this deal is 3.5 years, right? And we expect a investor return of 20% with an equity multiple of around 2x. Right. Okay. On the location, I'm going to spend good time on the location as we have investors both outside Washington State and in Washington State. This is what you see here is the map, and this is where we have Seattle, okay, and we have Bellevue and Redmond. Um, and the subject property is this particular location. If you can see my mouse, the red color pointer. Okay, this is the subject property location, and this is about 2.17 acres, and currently it is zoned for commercial. Um, and this particular location is about 12 miles to Microsoft and around 16 miles to Meta, the Facebook, the Google 18 miles, and from Seattle, this is close to around 25 miles, Okay. So overall, the location of the property is a place where there's a lot of high tech people and the working class people who live in that area and in a very close proximity of it. But let me take this time to open the Google and show it. Can you all see my screen? Nagesh, is it visible? So here's where we have Seattle and Bellevue and Redmond. Primarily, this is the corridor of uh, companies that include Amazon, Microsoft, okay, Starbucks, Costco, okay, and other notable companies. And a lot of the high-tech staff have the residences that are spread around Bellevue, Redmond, okay, and if you go here into Kirkland, Woodinville, Bothell, there's a lot of tech crowd who live in around this area. And the property that we're talking about is in Duvall, right? And this is, as I mentioned to you, probably around 15 to 20 miles away from the core office center, right? And the property is right around. Okay. This is the subject property, uh, and we have a good amount of residential development and commercial development around this property, and probably this is about half an hour commute from here to either ways you take into Microsoft or Amazon or Meta, Facebook, and Google campuses. People can drive by in about half an hour time, and this is one of the upcoming, and there's a lot of new development that's happening in this area because closer to Microsoft and Amazon campuses, this is all has existing development. The development in here existed for probably last 4 decades, 40 years, and the city has been expanding and primarily expanding to Monroe, expanding to Duvall, and a lot of new development is happening in this area. Right. Okay. As I presented again, this is the location that I showed you on the Google Maps. Now let's talk about the market and what's happening around the property, right? The one that you see here in the red. Let me scroll down a bit. Yeah. So the one that is highlighted in the red is a subject property where we plan to build mixed use, and um, there is a good amount of new development around this property. The one that's opposite to our property, 65 degrees, is a new development. There's a townhome development. Duvall Village is a fully townhome development, new ones. And next to us, we have a huge development of Toll Brothers. Okay, this is Pulte Homes. Okay, and there's one more development that's also coming up here from Toll Brothers. Okay, Rio Vista, uh, Thayer. Okay,
It's
uh,
KV, I think.
yeah, these two are also part of single family homes and townhomes development. And these four parcels are also recently, they went through the permitting process to build as a combined into a development of townhomes and single family homes, right? A lot of activity around this area, a lot of brand new construction, and pretty much, I would say, around 6 months to a year back. Okay, we have seen substantial interest from people on the purchasing side, and the homes that are opened up, okay, for sale are probably, sold out in maybe 2 to 3 days. Okay, but pretty good demand in this area. Okay. Uh, So I've mentioned here on the right side, we have Pulte Homes, we have KB Homes, we have Toll Brothers, Tri Point, Lennar, Mainview, right? Okay. All of these builders are right around the proximity of our subject property, right? On the analysis side, on the location itself, like Nagesh mentioned, right? I mean, we every year we start scouting hundreds of properties, and we go personally visit, we do analyze, and out of all of them we primarily come back and shortlist one or two properties. All right. And this is our fourth deal on the marketplace, and um, with a gap of about almost, the last deal to this deal probably about a year, okay. So we're digging deeper into it to pick the right property to bring it to the table. And the analysis that I'm going to show you in here on the Duvall market is pretty exciting for us. And let me zoom it here. Yeah, all right, okay. So the household side, we have about, well, the population itself, steadily increased, and we are at a rate of 2.38% and 2.39% for Duval and King County, which means that the King County is the key for a key area in the Washington state, and the King County is the one that houses a lot of the companies that includes Amazon and Microsoft and other companies, right? And the growth rate that we see in this county, okay, um, and particularly in the city, 2.3.9% is in comparison to what's happening in the King County. Okay. Along with that, out of 2,746 housing units that are available in the wall, only 2% are vacant. Okay. There's a high amount of occupancy, and 95% of the units in the wall are owner occupied and 5% renter occupied. Okay. In fact, when we spoke to the city had a very high interest of, bringing in more units, okay, that can be available for people, who can basically rent. That increases the more affordability into the county, okay. um, there are significantly more owner occupied housing units as compared to King County. From workforce point of view, um, the 54% of the population works in services, okay. And the average one that I want to call out especially is the median income of the households is around 162K, which is around 164% of the county median income, which is around 100K. Okay. This actually from the statistics point of view, plus also from our ground research, there's a lot of tech crowd in there, a lot of tech crowd, and lot of youth, and a lot of migrating crowd in there into that area, right? We also went and analyzed how many new units are coming up, okay, and what is the demand supply equation, okay. And we see that from the issue of the permits and all, okay, there are probably about close to around, uh, um, 415 of them totally combined, and there's about 161% of growth rate that is needed to satisfy 2044 housing target, okay. So the city is still encouraging to have new developments come up, because right now with the developments that they have, that is still short of the plan for what they anticipate to see until 2044. Okay. I'll not dig a lot into these, but overall, we would say that, occupancy rates are excellent. Okay, it's a high income area. Okay, a lot of good development in the neighborhood. These three are the key aspects of, picking and choosing this particular location of the wall. On the occupancy side, as I previously showed to you, okay, uh, the renter occupied, there are only 5% of units, and there's a lot of demand in there. And people do not have okay, available homes for them to rent, and this is where we thought of, looking through options, and we chose the option of building an apartment complex that is more suitable to rent, okay, as opposed to building condos or other units that we can sell and exit. Nagesh, any questions you see, or I can proceed?
No, not at this moment. One point is the city is also very excited about this project. For one, that for the
Mm.
last decade or so, there's been no new apartment development. Second is that typically apartment renters are the funnel for purchasing houses. So they would want people to come and rent and experience Duvall, and to raise its profile as a favorite destination for homes. Okay, next.
Yeah. All right. Again, on the income and housing gaps, as you can see here, on the left side, okay, what you see here on the red and what you see here on the gap, so uh, the red ones are the currently gap. That's the one that the city is planning to encourage the development in the area, okay, so that they can meet the future demand until 2044. Okay. As you all have been watching, or Microsoft and Amazon are both doing pretty good, and we do foresee, yeah, okay, the demand to continue to stay hold, the employment continue to stay hold in this part of the area, closer to Microsoft and Amazon, right? Yeah. The next one we want to talk about is the proposed layout. This is a proposed layout. We are continuously talking to the city and evolving on the plans. Okay. But the most recent one is the one that I'm showing it to you. This probably um, last 3 4 weeks older, Okay. Uh, this dotted line is the entire boundary of the property, and there's a wetland right adjacent to this. Okay, categorized as wetland A and wetland B, and we have some buffer that we have to leave for the wetland, and excluding the buffer from the 2.16 acreage, we are building the mixed use structure in here with the parking with ingress and outgress, and for a fire truck to come in and make a U-turn and get back, Okay. The mixed use structure is going to be 3-story with a rooftop on it, with the entire ground floor being the retail. And we are working with the city to see if we can basically have some creative ways of getting into more parking and more number of units. Okay. However, this particular project that we see in here, okay, there's a good amount of retail. There are already parties that were talking and reached out to us that there's an highly essential for a daycare facility that is needed in this area, given the number of housing units that came up, Okay. And from both from civil side, from the city, and also from our own market research, the retail building the retail space that we're proposing would probably be intended for more of a, daycare facility kind of stuff, and have the apartment units on top of it.
Yeah, So the ground floor, for whatever we choose to do, we want to focus on women and children because of very high residential density in that area, and the dearth of these kind of facilities. So a preschool, a kindergarten, a pediatrician's office, all those are or a Zumba kind of setup, like a gym. All those are common things that we've been thinking about, and there is pull for definitely the preschool and kindergarten.
Yeah.
And there are about 50 parking spaces there, and we are looking for creative ways to be able to increase that, because that determines the number of apartments we can get.
Right. Yeah. And on the more details, as Nagesh mentioned there, we are looking at one retail box of approximately 9,000 square feet, and around the level one and level two residential of around 20,000 square feet. Okay. Uh, Overall, on the entire square footage wise, looking around close to 28,000 square feet. This is all changing every week, as we are doing back and forth with the city. And the retail box, as you see here, while we mentioned it is one unit, we are trying to build a box that can also have, multiple access and might even result in probably, uh, two partitions with, two different tenants that we can have. And on the level one and level two apartments, we are looking at some of the features that includes balconies and also some space on the rooftop kind of stuff, because this is on a hill that has amazing views, okay. Um, mm, it's
Yeah,
on a
and the
hilltop
number
that
of
we can,
units, yeah,
yeah,
and the number of units is changing right now. It could go up to 25.
right,
We feel comfortably. Yeah.
right. On the proposed facades that we have, okay, um, we plan to have, okay, something around the modern look. That's the one that's happening across the, Redmond, Bellevue, and Kirkland kind of areas. Okay, so we plan to have the entire ground floor retail and the top two stories of, apartment units with balconies. Uh, right. On the development partners, we have engaged two local and very renowned architect and civil firms. The first one, ESM, is our civil firm. They are very specialized in land use planning. Okay. And also they are popular. The most famous one is the Sankedia Resort. They were the civil engineering firm who designed Sankedia. For those of you who are in the state of Washington, this name is very familiar. This is one of the most popular resort that most of the Microsoft and Amazon execs probably hold a unit in that resort. Okay. Um, yeah. On the architect firm, Driftmeyer Architects, they are very local to Redmond. They are very much familiar with the city of Redmond and also city of Duvall. They have worked on multiple projects in that area, and their most prominent one is the Redmond Center that they have built, and the Milltown Commons. Both these firms have been in the business for more than 40 years. Okay. And they know the code. Okay. They have relationship with the city staff in terms of, having the familiarity of the discussion and the faces to it. Okay. Both the firms are right now engaged. We have done all of the groundwork right now. We have done the surveys to geotech to as well as, doing the wetland studies. Right now, we are trying to go through different modeling aspect of it to see how we can maximize the number of units. Yeah. Um, Coming back to the schedule, we have acquired the land almost exactly a year back. In December 23, we acquired the land. We have done prior to that, we have done the feasibility in terms of trying to see, hey, what's the best use that we can make of the parcel, given the wetland taking away probably a decent chunk of the space. Okay. We analyzed it. We did the feasibility on it to see how does our returns look, excluding the buffer that we need to leave for the wetlands. Okay, so we acquired the land in December 23, and from December 23 to until now, okay, we went through with the city a pre-app meeting uh, to see, hey, how high can we go, how many units can we get, is there any wetland mitigation that we can do, to maximize, is there the parking side, can we have a multi-level car parking. Okay, so we went through various aspects of modeling with the city. Okay, and this is why me and Nagesh, we consciously made sure that we have a solid plan before we bring a particular plan to the table. Okay, and the last 1 year was the time was spent with the civil firm, okay, and the engineering firm, to do all of that analysis, and come to the aspect of, hey, this is what we want to do on the ground floor, this is what we want to do on the top two floors, and how to have the parking and everything. Okay, so the last 1 year was spent in doing all the due diligence, removing a lot of ambiguities on it, doing the financial modelings to make sure that we collectively, the GCs, and the investors, everybody has a good return of investment on this particular deal. Okay. Particularly the last month, we are almost there with respect to the size of the units, with respect to the size of the retail, and with respect to some of the green flags with the city in terms of, hey, we're very comfortable with this, that you guys can go ahead and start doing it. Okay, we eliminated a lot of risk during the period. With that said, we now have a clear or a close approximation of what the project looks like, and how much square feet are we building, and renting the square feet, and the financial modeling around it. This is where we came together to open the fund, and put in a plan which is about the three key milestones to it. There's a plan for entitlements. When do we get all the permits? We anticipate to see from January of next year to by end of next year. We plan to get the entire project permitted. Okay. Right now, there are zero risk, there are zero ambiguities, there is no rezoning that we have to go through. Okay, we can go through full set of plans and submit it to the city to get permits, right? And then by typically the December to March, which is the winter period, is the period where there's no groundbreaking that happens here, and we plan to engage a GC during the winter periods, finalize the GC, finalize the construction loan, and have the construction start and from spring, which is April 26, and go all the way about 18 months. We kept a construction cycle of about 18 months. Um, and then once the construction is finished, okay, we plan to go for a leasing and stabilization for 6 months. That brings us to end of the fund, okay, which is where we anticipate to see around close to 3.5 years is what we are planning for this deal, from in permitting to construction to leasing and stabilization. Okay. Leasing metrics, I'm going to share some of them. The market is very, very strong here. Okay. The rental market is extremely good. We are going $2.5 and above, uh, under on the square footage and per square feet size, Any questions? Anything, Nagesh, that anybody raised hand or any questions while I can.
No, I am not getting to see it. Maybe it's on your side. Nothing
Okay.
has come to me yet.
Okay. Yeah. On the financial side of it, we have acquired the land for about 725K. Um, our soft costs, okay, is around 468K. Okay. That includes all of the studies, the engineering to the land holding costs, uh, our hard cost and SG&A, that includes around 7.5 million of hard cost, which is doing the horizontal work, doing the vertical work. Okay, vertical construction, both of them include 7.5 million, and the holding SG&A are about 1.8 million. These includes the construction loan cost. The interest rates are staying higher side. We have taken some buffers in there. Okay, both in terms of the uh, interest rates variation, to also the some of the construction cost fluctuations that we can anticipate. Overall, close to about 10 million, 10.5 million. Okay, 10 point, and then uh, between 10 and 11, and this includes a decent amount of buffers, and we did multiple modelings and we came to the similar number, that's also aligned with other projects in the neighborhood, okay, and to come to this particular number. On this one, on this particular deal, we are planning to raise about 2 million of investor equity. Okay, and that brings us to close to about 19% of the deal is going to be investor equity, right? And we anticipate to have a construction loan of around 8.4 million to raise on the construction loan. Uh, the neighborhood is very strong. A lot of recent developments that are fully stabilized, around the area. Redmond Ridge is the closest one to this particular property, and there are a good amount of local lenders who are very excited about this particular area. Uh, the deal by itself, on this one, we are trying to have a simple structure. There are sponsors and investors. We plan to have Class A members and Class B members, that are holding the asset. On the fund structure, as is on the right side, we have the sponsor, which is the Rice Capital. Uh, Rice Capital, when we say the sponsor, is the one that is bringing the deal to the table. That's the one that will primarily be engaging with all of the civil, the engineering, and driving the project from getting the entitlements to the getting the construction plans in place and the lender in place, and finishing the project. That's the sponsor, the Rice Capital. And we have two entities in here to be noted. The property itself is where basically there's an owner for the property that is called Duvall MU. Okay. And we have a holding company, and that is Duvall MUHC. Okay. We have a certain nomenclature that we follow on each of the property. The MU stands for mixed use. The wall stands for the city in which the project is. Okay. And the holding company is the one that actually has the structure of the investors combination and the sponsors combination. Okay. So the investors who hold the equity on the holding company, the sponsors hold an equity, and both of them combined, Duvall owns the property or the asset. Okay. And all of the structure has gone through the legal vetting. The entities are created in place, and we are we are launching this deal on the Realty Slices marketplace for us to go through the full life cycle of the accredited investment life cycle, to bring in the investors and manage the investment process and the returns along the way. Okay. The structure in here is again a fairly simple one. All the investors will come in into their money will flow into the Duvall MUF. F stands for fund. Okay. So Duvall Mixed Use Fund, and the sponsors investment comes through the Rise Capital, and both the funds will be moved into Duvall MUHC, the one that's holding the property. That's the structure. Yeah. Right. On the distribution side, with the waterfall part of it, it's we maintain the similar standard of the other deals, and there are three levels of the waterfall. Okay. The first level is we are providing a 8% of preferred return for the investments. So at the end of the deal, okay, each of the member who has invested into the deal, okay, will first receive an 8% of compounded annually for their investment, that will be first paid off to all of the members. Okay. The second one would be after that is paid, we are going to pay off the 100% of the pro rata, whatever the investment that's been provided to the fund, that part of the investment will be paid off to all of the investors with the IRR of about 20%. Okay. The third one is after the is paid up, there's a 70% to the members pro rata and 30% to the sponsor. There's a split of 70-30, and that happens between the sponsor and the investors. Okay. The waterfall ensures that the members' interest or the investors' interest is first taken into consideration before the sponsor gets any returns on the project. Okay. This is again as we went through the previous deals too, there's a lot of information of this on the internet. You're all free to ask questions. This is baked into the investment documents. Okay. The documents call out how the distributions happen, what is the structure of the distributions. Okay. Feel free to ask us any questions along the way. Overall, on hypothetical 100,000 investments, we are anticipating to return 189, 886 in 3.5 years. Okay. This is our modeling, uh, and the returns that we are forecasting and projecting as part of the deal. Okay. Yeah. Yeah, we went through the aspect of the market. We went through the aspect of what we plan to do, the timeline and the financials. And again, coming back to the sponsor side, the Rise Capital is a structure and entity that is combined with Nagesh and myself, both of us being the co-founders of it. Okay. And we both have together, um, have done a good amount of land banking properties, and personally myself, we currently own about close to 20 plus properties, and around 20 million across the Washington state, and we have about five properties that we are also developing into multifamily, which includes townhomes and apartments. And Nagesh, with his experience, has about close to 100 private equity investments, real estate investments, across the nationwide. While I'm more focused on the Washington, Nagesh has the widespread across beyond Washington state, and holds 100 plus real estate equity investments. Okay. Combined, we bring in around close to 10 plus years of experience on the real estate in terms of vetting the properties and going through the aspect of permitting process. Right. The next steps on this particular, yeah. So we have a question from Kiran. Uh, hey Kiran, go ahead, Kiran. Yeah.
Oh, I was about to ask, what was the hard cost you had it like 7.5 million?
Yeah. Right. Yes, we have 7.5 million. Correct.
Yeah, I mean, I'm gonna hear what is the
What goes into it?
Yeah. What does it mean, the hard cost?
Okay, so hard cost means that, uh, so I'll start with the soft cost. Soft cost is about all the engineering and planning in the documents. Everything is design and engineering on the documents, with the city saying that, hey, this is what we put utility, this is where we bring electricity, the water, underground, the sewer part of it, storm drain. Okay, lot of planning is soft because the hard cost is actually going ahead and doing it, which is, hard cost is a combination of two parts, horizontal and vertical. When we say horizontal, everything that we do on the ground, that includes digging the ground, putting in the electricity, putting in the water, putting in the sewer part of it, taking care of the storm drain, okay, putting in the roads, okay, walkways, all of that is part of soft cost. Sorry, all of that is called horizontal, which is one aspect of hard cost. Once that is done, you go vertical. You start building the foundation, you start building the walls, you start building different floors and the roof. That is called vertical. The real construction cost is the hard cost. Does that answer, Kiran?
Yeah.
Right. Yeah. And at a very high level, just to give on this one on these numbers, we have approximately projecting around $350 per square feet with all the buffers in, okay, on the higher end. And right now we see a market that supports us around $450 and above, okay, of selling price or valuation, on each of them.
Yeah, and that is actually townhomes. Apartments would be much north of that.
That is correct. That is correct, because the apartments come with security aspects. They come with a common area. They come with full, the heating and cooling aspect of it. They have elevators in it. They come with a lot of different aspects. You're right. Apartments are a little more higher and expensive than the townhome dollar per square feet. Yeah.
Any other questions?
Yeah. Feel free to raise hand as you have questions, and um,
Want to go to the summary page?
page.
Yeah.
Right. Yeah, on this one, again, we have strong fundamentals of it, very high medium income, close proximity to major tech firms. Okay. Again, on the built-in risk, the financial modeling that you see in here, we have actually factored in good number of points for interest rate fluctuations. We have factored in almost close to a 10% of buffer for excessive overruns on the construction cost. Okay. On the vacancy side, we have just a 2% of vacancy rate, and there are very less rental opportunities available for people to rent around the area. Okay, so we see a very strong demand in this area, and once we build it, we have a very high confidence on occupancy rates staying at a higher end, right? Local sponsor, me and Nagesh are probably maybe 10 miles away from the subject property. Okay, and uh, we both being ex-Microsoft, okay, we have good amount of people who live in the neighborhood, and uh, the civil firm, the architect firm, okay, the city, and also the community around it. Okay, we have a very good, strong relationship across the board, Okay.
Yeah, and we have already, even at this stage, we've reached out to GCs, and one of the GCs has actually given us an estimate of the construction of all aspects of it, and those are the numbers that we've used for modeling. And this is quite early in the project, but we have a good feel for it, and we believe that we can grind them down as we get more specific.
Right. Right. Yeah.
Okay. Pavan, do you want to show the portal and like what they would want to do, they would have to do if they wanted to invest?
Sure, Nagesh. I just want to see if any questions we have, and
Sure.
then yeah. Yeah, hi, Madhu, go ahead. Yeah. Madhu, please go ahead. You raise the hand, I believe. Yeah. Anybody has any other questions? If there are more here, Nagesh. Let me see through. Is it possible to schedule a customer reference call from any of your existing customers, especially if they're investing in this deal as well? Nagesh,
What is this? Sorry, what's the question? One moment, let me look.
yeah.
Is the link I can hear? Is it possible to schedule a reference call from any of your existing customers, especially if they're investing in this deal as well? I'm sure we can ask some of the current investors to, at least one of the current investor I can talk to, who can speak with you, but I have to get his permission. Yep.
Yep. And then, okay, Madhus do not have mic. I
That's
posted.
fine.
Okay, good. That would be good. Sounds good, Madhu. Yes, we can do that. Okay.
Anything else? So thank you, Pawan. I mean, that's definitely an exciting project from Rice Capital. I want to take over to show people how to use the portal if they want to find out more information or want to invest in this deal. One moment, let me move this out.
You
So
want to
if
share
you're
it,
not joined RealtySlices, click here, and it just takes 2 minutes. It should not take you more than 2 minutes to join.
you
This
want
is
to
a
share it, Nagesh?
typical.
Or shall I share the screen, or let me share it?
One moment. Let me share the screen.
Yeah.
Our Teams, hang on. So, all right, share. Oh, you have to enable me.
Yes, Nagesh. Short, yeah.
Share screen. Okay, so this, let's go to this one. I can pick another clean window. RealtySlices.com. So joining RealtySlices is, just a couple of minutes job. Just give you a phone number and some vitals. 425-615. That's my number. Continue. This the whole experience is optimized for mobile. Okay, so this is me as an LP. So here, if you were to go, this is the homepage, just to give you a feel. This is the dashboard showing some of your investments, what your portfolio is, then what your contributions have been, what your distributions have been. Like these are distributions from the firm. What a full log of your transactions. All the documents that you signed, all the notifications that you received, and anything that you want customer service on. And then if you were to go into your portfolio, and if you've already invested in one of the deals, this is the deal room. The deal room shows the deal exactly as when it was floated, all the information that was provided to you. All that information is given to you. The Q&A that you had, the distributions that you had on this particular deal, the various updates that you got from the sponsor. This is the card that actually summarizes everything and the documents that are pertinent to this deal and that you've signed. Now coming to investing in this deal, right? So you go to the marketplace, and this is the deal. Click on the deal, and it gives you a lot of the information that we've talked about. It gives you the capital structure of the deal, the location of it. All this is clickable. This is sources and uses of funds that, again, you saw just a few minutes ago. How the capital stack is arranged. The total is 10.58, and how much is from debt, and how much is total equity. Of the total equity, how much is sponsor and how much is investor equity. And then RealtySlices placement fees. That's the one that Rice Capital pays RealtySlices for floating the deal. This is the structure of all the entities in the deal. It explains the waterfall model and all the information, including the presentation that you went through, the formation of each of the formation documents for the entities, the organization structure, the private placement memorandum that talks about this particular placement and what the risks are, what the outcomes are, what the project forecasted outcomes, and what the project structure is. The subscription agreement is exactly for the number of units that you would want to invest. Each unit is $50,000. No fractional investing is allowed, so it's actually multiples of 50K. Each unit is 50, and we talked about the waterfall. Here is the investment risks and frequently asked questions. Again, feel free to share the deal with other people that that might be interested in this deal. That's something that we are. This is not the last deal. This is just the fourth deal, and a lot more to come. The other things I would also suggest is please follow us on LinkedIn. And every day there is one curated content that is posted every day. And as you want to get more informed about real estate investing in general, what's happening in the real estate markets, what's good, what's bad, what regions are good, what regions are bad, and also giving you a lot of tutorial kind of information. And in addition to that, if you are newer to real estate investing, I'd suggest that you go to resources, and there is a lot of information on information on why should I even do this, what kind of other things are there, how can I invest, how is this different from other kind of real estate investments or other kind of investments. So that kind of information is all here. There are a lot of blogs that we've written that also again help you understand both for sponsors and for investors. These are very well curated blogs, and you will get a good feel for okay, you don't know what a capital structure is. There is a good a blog about explaining every aspect of capital structure, what the risk involved in each layer is, and what potential returns you can get. And similarly, that if there are, how do you assess the risk of an investment? I'm sure there are other information found on the net at large. This is curated blogs that we believe will help you understand this better. The common metrics used to evaluate real estate investments, literally the most common ones have all been brought together with specific formulae, with also an example, so you will know what the formula is, and also an example using example numbers. So you get to understand how to actually evaluate a real estate deal, not just this deal. I would like all of you to subscribe to RealtySlices on LinkedIn, and also check out our blogs. And most importantly, would love for you to assess the suitability of this investment and take a prompt action. Thank you.
Good, Nagesh. Yep.
Anything else?
Yeah.
Okay, that's a wrap.
Yeah.
Thank you very much for coming into this call. Take time to review the documents and make your investment decisions. Thank you.
Thank you, everybody. Thank you. Take care.